Thank you so much for coming into the studio. So, we had those earnings out from IBM and TI, a bit disappointing. How do Indian tech companies, how are they shaping up with their earnings for the second quarter?
We've seen a very strong set of numbers from the Indian tech companies. I mean, the demand has shown clear resilience, though I'd say margin defense was mixed across companies, but clearly demand has really surprised on the positive side. I think what is happening particularly for Indian tech companies is there's a sharp focus by the global companies on increasing productivity, on improving, staying competitive using technology, software tools, and that is what is leading to increased outsourcing, and which is why these companies are talking of good visibility for next couple of quarters.
Interesting. And what about the overall second quarter earnings season for Indian companies? How's that shaping up?
I think the earnings season has been pretty satisfying. I talked about the tech results where demand momentum has been very strong. We've seen good set of numbers from financials. The net interest income has been fairly strong. Advances growth is 20% plus. Margins being stable, and most important of all, delinquencies haven't increased. So till now, I think earnings remain on track.
One of the things that we're seeing, and it is very early on in the season, is a sort of a lack of top-line growth. This is something that investors and analysts are expressing concerns about. We're not seeing demand coming back, but in India, you don't see that.
I think clearly there's a difference. We've clearly believed that for the developed world, we are past the big hump of the recovery, which was led by restocking, and what we're going to see is more subdued growth led by years of deleveraging. But in India, if you see, I mean, the Indian economy has multiple ecosystems. We've got a rural or a semi-urban economy, which is doing exceptionally well on account of higher crop prices, land prices have gone up, their prime source of wealth, gold has done well. So you're seeing an economy which is doing fairly well. The penetration levels for autos remain low. I mean, wages have increased by about 10 to 15% annually for the last couple of years. So I think there's a strong feel-good factor in the economy.
What about the Sensex, and what are you expecting in terms of growth through the end of this year?
I think the earnings growth for the market should be anywhere between 20 to 25%. Global commodities clearly remain the risk factor. So one is not sure where the global commodities would head, and global commodities are nearly about 25 to 30% of Sensex earnings. But outside that, I mean, we still remain pretty positive on the domestic link sectors like banks, autos, and healthcare should do well.
So I want to get a hold of that 20-25% return. Where health, banks, auto, do you have some specific stock picks you want to tell us about?
I can't share specific stocks with you, but in terms of sectors, particularly financials we like, and within financials, public sector financials, which trade at about, let's say, 1 to 1.5 times forward books, about 5 to 7 times forward earnings, with a ROE of about 17 to 20% look good for a 20-25% upside. Industrials, which are not looking to dilute and which can grow well for next 2-3 years, look good, and healthcare names still look good at this point of time.
What are the headwinds? Because we do have a global economy, a recovery that's pretty fragile here.
Yeah, I think clearly the headwinds for India is, again, inflation. Though we expect the inflation to kind of peter down by the end of this year to about 5 to 7%. But what one has to realize is that at a GDP growth of 7 to 8%, the supply side in India, because of the logistical bottlenecks, is not capable of responding efficiently. So high inflation is going to be there. And apart from, and you need a good monsoon to make sure that this inflation goes down. So clearly monsoon is something one would like to watch for. And outside that, I think high current account deficit is really a near-term concern for India, because if capital flows,
the government's trying to get
if the capital flows recede, I think liquidity can be a bit of tight stuff.
What do you predict in terms of capital inflows, foreign inflows into India? Do you see those receding or increasing?
Honestly, I think if you take a 1 or 2 year call, we look at, we believe that investors are underweight emerging markets. You look at the weight of emerging markets in global indices, that's about 7 to 8%, and contribution of emerging market to world GDP is about 14 to 15%. So that has to kind of match over a period of next 2-3 years. Near term, if there's a big credit freeze globally, we can see some outflows.
Okay, thank you very much.